Hey there, future traders. Welcome back to the channel where we break down complex financial concepts into easy-to-understand strategies. Today, we're diving into the world of technical analysis, your secret weapon for making smart stock trades. Whether you're a newbie or a seasoned trader, this video is packed with tips and techniques to help you make informed decisions in the market. So grab a pen and paper and let's get started. First things first, what is technical analysis? Unlike fundamental analysis, which focuses on a company's financial health, technical analysis is all about studying past price movements and trading volumes. By analyzing historical data, traders can identify patterns and trends that might predict future price behavior. In other words, it's about using the past to make educated guesses about what might happen next. To use technical analysis effectively, there are a few key concepts you need to understand. Let's break them down. Support and resistance. Think of support as the price level where a stock tends to stop falling, and resistance as the level where it tends to stop rising. These levels act like barriers, and understanding them can help you decide when to buy or sell. Moving averages. Moving averages smooth out price data to help identify trends over time. The 50-day and 200-day moving averages are particularly popular. When the price crosses above or below these lines, it often signals a potential change in the trend. Trend lines. Trend lines are straight lines drawn on a chart that connect two or more price points. They help you visualize the direction in which a stock is moving, whether it's up, down, or sideways. Now that you've got the basics down, let's talk about some popular technical indicators that traders use to refine their strategies. Relative Strength Index, RSI. RSI measures the speed and change of price movements, oscillating between 0 and 100. An RSI above 70 might indicate that a stock is overbought, while an RSI below 30 might suggest it's oversold. This can be a powerful tool for identifying potential reversal points. Bollinger Bands. Bollinger Bands consist of a moving average in the middle with two standard deviation lines above and below it. When the price moves outside of these bands, it might indicate that the stock is either overextended or due for a correction. MACD, Moving Average Convergence Divergence. The MACD is a trend-following momentum indicator that shows the relationship between two moving averages of a stock's price. When the MACD crosses above the signal line, it can be a bullish signal. When it crosses below, it can be bearish. So how do you put all of this into practice? Here's a step-by-step guide to using technical analysis for smarter trades. Identify the trend. Start by looking at the overall trend of the stock. Is it in an uptrend, downtrend, or trading sideways? Use trend lines and moving averages to confirm the trend direction. Find support and resistance levels. Mark the key support and resistance levels on your chart. These will help you determine potential entry and exit points. Use indicators for confirmation. Once you've identified the trend and key levels, use indicators like RSI, Bollinger Bands, and MACD to confirm your analysis. Look for signals that align with the overall trend and support resistance levels. Plan your trade. Based on your analysis, decide on your entry point, stop-loss level, and profit target. Always make sure you have a clear plan before entering a trade. Execute and monitor. Place your trade and keep an eye on how it's performing. Be ready to adjust your strategy if the market conditions change. Even with the best tools and strategies, it's easy to make mistakes in the stock market. Here are a few common pitfalls to watch out for. Overtrading. It's tempting to jump in and out of trades frequently, but overtrading can lead to losses. Stick to your plan and avoid making impulsive decisions. Ignoring stop losses. Always set a stop loss to protect yourself from significant losses. It's better to take a small loss and move on than to hold on to a losing trade. Trading without a plan. Never enter a trade without a clear plan. Know your entry and exit points and have a strategy in place for managing risk. Technical analysis can be a powerful tool in your trading arsenal, but remember, no strategy is foolproof. It's all about combining your knowledge, skills, and intuition to make informed decisions. The more you practice, the better you'll become at spotting opportunities and avoiding pitfalls. If you found this video helpful, be sure to give it a thumbs up, subscribe to our channel, and hit the notification bell so you never miss an update. And don't forget to drop a comment below with your favorite technical analysis tip. Thanks for watching, and we'll see you in the next video.